Good morning, traders. Welcome to the Phoenix Blue Morning Update on Thursday, the 3rd of March. On these videos that come out every weekday before 9 a.m. UK, we have a run through the markets yesterday. We look at the Asian markets overnight and look forward to the day ahead. Today we're going to be talking about positive US data that's been coming through in the last week to 10 days and the upcoming non-farm payroll data due out tomorrow, Friday. So let's start over at the news announcements and have a look through what happened yesterday and what's lining up for today. The Aussie overnight, the night before, we had some positive gross domestic product figures. They've been followed up with some positive Aussie trade balance figures. When we say positive, we mean, obviously this is a negative figure, but it is ahead of the forecast figure, and that is interpreted by the markets as positive. Overnight tonight we have Aussie retail sales. It'll be interesting to see if this follows through and we get some positive numbers in that area. We had some construction PMI numbers from the pound yesterday, but also ADP non-farm employment change from the States, and we got some more positive numbers there. They followed on from Tuesday's ISM manufacturing PMI numbers, which were again positive. So we seem to be building a groundswell of positivity in these data statements. Later today we have unemployment claims and the ISM non-manufacturing PMI from the States. Again, it'll be interesting to see whether these increase the positive expectations that are already building towards non-farm tomorrow on Friday. Okay, over to the Asian markets. This is the US dollar Chinese yuan exchange rate. We saw a slight strengthening of the yuan overnight, but nothing significant. Over on the Shanghai Composite, the equities in China, we're still hovering around these 2015 lows, which have been our point of focus all year. All the data coming out of China is negative. We had a downgrading on the credit rating for Chinese government debt from Moody's, the American credit rating agency, and then we downgraded to negative. It's not doesn't itself won't have a huge effect on the markets, but it's just a reflection on how much negative data is coming out of China at the moment. Over on the Nikkei, we had a positive trading session overnight. Partly, believed, driven by the Deputy Governor of the Bank of Japan, who confirmed that although they were looking to the Japanese government to drive inflation back into the economy, they still had room to expand their stimulus, either by adding to large asset purchases or pushing interest rates further into negative territory. Straight over to the US dollar JPY, the yen currency pair, and how does that comment reflect in that market? Well, we've seen this level before that we believe the Bank of Japan are already protecting. We took a trade here when we had a confluence with almost all the yen cross pairs at significant levels. Price came back down again last week, I believe that was, to that same level. Again, we believe we saw intervention push the market through again. We took a trade long on that. What this statement's basically saying, I believe, is that if price comes down again, this level will be protected, because the long-term objective for the Bank of Japan and the Japanese economy in general is devaluation of the yen to try and drive elusive inflation into their economy. Over on the US dollar index, we've been talking about dollar strength all week. We appear to have a point at 98.50 here, where we're currently facing some resistance. I think the resistance may be predominantly due to lack of liquidity in the market at the moment, pre the non-farm payment announcement tomorrow. If we get positive figures on non-farm payroll, I believe we'll break this level for increased dollar strength. However, I do believe that there's an expectation building now that the non-farm figures will be strong. If they fail to deliver significantly better than the prediction, I think we could in the short term see a pullback on dollar strength before a move long again, simply because of the expectation the market's built itself up to. We'll see this reflected in the euro US dollar pair. Again, we're at a level which we don't seem to be breached at the moment, despite positive US news. Again, I think this is potentially down to lack of liquidity. I think we'll see, if we get those good figures through, we'll undoubtedly see a move through this level and continued dollar strength. We're expecting into, I think it's the week after next, we've got the ECB rate statement and press release. We are anticipating a further intervention in terms of easing, so that would play into our dollar strength bias down here. Okay, a trade we're interested in at the moment, the GBP US dollar, the pound, a couple of clear levels here. We're looking for a pullback into here. I think I mentioned a number of times our bias on this market is exclusively bearish because of the Brexit, so we'll be looking for trades in and around here as long as they don't coincide with tomorrow's non-farm announcement, which we will look to stand aside and look for the results of that and how the market reacts before entering new trades. Over on the Aussie, we mentioned when we were looking at the news, we'd had some positive data this week. That's reflected in the way that despite some dollar strength, the Aussie has been bullish. We have a strong level here. We've got more data to come from Australia before the non-farm, so we could quite possibly see a move up to this level. If non-farm delivers the dollar strength we expect, then we could be back down to the short side where our bias is. Over on crude, that was another thing we mentioned on the news. We got some really massive increase in stock holdings of crude in the States. We would have expected yesterday's bar to have reflected this. It may have done, or did in the short term, but crude remains bullish despite those figures. That indicates to me that there's a groundswell of support for crude. So at this moment in time, our stance is more neutral on crude than it has been recently. We did think it was potential that we'd reach further lows, but that doesn't seem to be the case in the short to medium term. So we'll be looking at this trend line here, or this level of support here, as the next point for a top to trade short. We drew another trend line in here yesterday. That seems to emphasize that there has been a breakout from this short move onto the long side. So we'll be trading crude with caution. We'll be also cautious on the Canadian dollar, which is inverse to this. I did mention yesterday I thought there was some break in the correlation between the two in the short term. So again, we'll be trading that with great caution. Okay, that wraps everything up for today. Just a reminder that the way we trade here at Phoenix Blue, we look to use clean charts with price action and horizontal levels. We buy and sell with the banks. We only trade with a fundamental bias. We also use independent signals from the Commitment of Traders report. We predominantly use 40 pip stop losses in the FX market, so you're more profitable with a smaller number of winners. And if you'd like to improve your results, your trading results, and take your trading to the next level, please don't hesitate to email us at info@phoenixblue.co.uk. Anything you want to talk about or to make an appointment to come and see us, that was totally without commitment. If you have any questions about this video in particular, I'm available on tom@phoenixblue.co.uk to answer those questions. Okay, so that wraps it up for today. I look forward to speaking to you tomorrow ahead of the actual NFP statement itself. Goodbye.